Should we talk tech? Should we talk startups and investing? Don't be too excited.
We absolutely should. Let's go.
The biggest unanswered question is, where is the money?
Mads, we were talking before recording, and there was some you said, look, I've added some stuff to the docket. Let's kick off there. I'm not going to do the usual intro stuff. Let's kick off with, because there's some exciting things happening. Let's start with you.
So the context this week is that we are so back. Just going back a month or two, there was a lot of just questioning about the Trump administration and everything that's been happening. At the start of the year, everybody was excited. We're going to get a new administration. M&A is back. IPOs are back. And then came trade wars and lots of questions around fiscal discipline. And actually, sort of the April and early May was quite wobbly. Well, guess what? All of that seems to be forgotten now. We've had a red-hot IPO market with the CoreWeave IPO, with the Circle IPO. They've absolutely exploded since they went public. Circle going public only earlier this month, already up a multiple of that. IPOing sub $40, now up above $200 in just a few weeks. We have the S&P 500 less than an inch from the all-time high. And what seems almost even more crazy is that with all these shenanigans we've had with the trade war, the tariffs, all this uncertainty around the U.S. economy, consensus forecast now is that the U.S. GDP will grow 3.5% in Q2. It's absolutely bonkers. Not many weeks ago, since Jamie Dimon was out saying that there could be a recession in the U.S., well, that seems to be forgotten now. At the same time, the U.S. dollar is at the weakest point versus the euro since 2021, and that's obviously supporting U.S. exports. That euro strengthening has also pulled up sterling. So sterling is strong versus the dollar, which is in many ways probably one of the things Trump was trying to achieve. Now, the big test is still ahead of us. We've got earnings season coming up here with the Q2 earnings announcements coming out as we enter July. But one thing's for sure, IPO markets have recovered and really are the best they've been for several years. The M&A market is looking like it's up. There's still some uncertainty ahead for Q2, but we are lined up well, and that should be good for exits and DPI everywhere. So some positivity here taking us into July.
And I do not want to be a negative Nancy, but A, is this bubble territory? Is this pop territory, to Jamie Dimon and other people's point? And B, what does this mean for us over here? So, Mads, keep going. Is there anything?
Yeah, no, absolutely. We should unpack it.
About?
We should unpack it during the show. So I think the U.S. fiscal position is not great. The U.K. Federal government has got a massive deficit in terms of the public finances, and it looks like the bill that's making its way through Congress will only add to that deficit and add to the U.S. debt. Still, interest rates have not gone up as fast as we might have expected. They're around 4.3% now for the 10-year. Inflation is not as low as one would like, but it's not gone up rapidly. And so, yeah, we're sort of in this odd world where, some of the signals are not good, but, what we can see is just the excitement around AI, which is, kind of this thing that's driving the market, but really also around crypto and stable coins with Circle and everything that's happening in that side of the economy is driving so much excitement that some of these negative things seem to be forgotten, at least for the time being. And as possible as that, I'd say, how does it impact us over here? We do hope and expect that this will lead to more M&A activity for the second half of the year. Potentially one of the biggest risks there is, I think, one of the, authorities that still is, perhaps anti-big tech M&A is the EU. And so, I hope that a pragmatic view will be taken. If we will allow some of the big companies like an Amazon, like a Google, to start using some of their balance sheet to do M&A, well, that will certainly help, in terms of more exits, money that will flow back into distributions to LPs and back into the venture ecosystem so we can keep that positive cycle going. So I think we probably have some responsibility on this side of the pond to do the right thing.
Andrew, do you hold the same optimism? Because listen, we're called Upside, right? And that's all push upside, whoop, whoop. But Andrew, you are my voice of reason. shall we say? Where do you fit in all this?
Oh, flattery will get you everywhere. I'm optimistic. My frustration is that one of the reasons America bounces back so quick is just sentiment. We talked about this before. Expectations shape behavior. So if consumers or businesses think things will improve, they spend and invest more, and they raise demand, and that raises output. And evidence shows causality on this thing, right? The studies using statistical models and very, lots of research, academic research on this, that changes in sentiment often precede changes in GDP, not just follow them. And the false optimism or pessimism has real effects. So even if the underlying fundamentals don't change, belief-driven shifts, I think they call them like noise shocks, still alter reality. And my broad optimism long term is always tempered by some pessimism in the UK and Europe, because I do still think we're our own biggest problem. So I'm extremely optimistic and excited about the European tech ecosystem and the possibilities, but we do have a tendency to talk ourselves down. And there's a reason America's bouncing back. That's some fundamentals, but it is a big dose of we're going to go do this, we're going to go make money, we believe in the technological future. And Europe's saying that, but is it putting its own money where its own mouth is? That's my big question.
We're going to unpack all of your positivity and maybe some of your naysayingness. We're going to start with Amazon, because there's been some pretty kind of big news with regards to UK specific tech and other investments. There's been a lot of positive noises. So Amazon UK investment into the UK is now they've just pledged 40 billion. And Mads, I'm going to lean on you for some details on this in a second. And as we're speaking, Starmer is doing some backroom deals with his Doge-esque government savings and dealing with Labour rebels to try and temper some of that. Again, we're going to talk a bit about that later. So there's some challenges in the government, but on the investment side, there's some really positive noises, private and public. So Amazon announced this week 40 billion investment to the UK. Visma, I think they're the Norwegian software co. They're deciding to list in London, not on the Nasdaq. The British Business Bank has increased its budget, I think, around to 25 billion. Again, Mads, I'm going to lean on you for some specifics there. And then obviously that budget then will, to your point, Andrew, will then leave us some of the more private capital. The UK government has announced this 8-pronged industrial strategy. So all these things are really extremely positive against the backdrop of NATO members unilaterally agreeing to spend 5% of GDP, which we have, again, spoken about before. But I do believe that more broad defence resilience push will feed the financial markets, both public and private. I think that's going to do good stuff. Apart from poor old Pedro Sanchez, the Spanish PM, I don't know if you saw it, but did you see him standing to the side of his NATO allies and was being a bit of a negative Nancy about pledging 5% of GDP? So I thought that was quite interesting, an interesting optic. But Mads, this all feels super positive. Can you unpack some of the numbers for us?
No, I mean, we wouldn't be Europeans if we couldn't find some way to have a sort of slightly negative angle on stuff. But, let's just start with the good stuff here. Amazon is, as you're saying, they're saying they're going to invest 40 billion pounds here in the UK over the next few years. That is, by any measure, just a staggering amount. I mean, we sometimes compare ourselves directly to the US, but, we have to remember that the US is an economy that's much, much bigger. So by any stretch of imagination, this is a big, big commitment from Amazon. 8 billion pounds into new data centers. This is a follow-on from an announcement that was made last year. So the 8 billion is not new money. But then on top of that, 32 billion pounds of new cash to go into distribution centers, kind of 4 new fulfillment centers, delivery stations, new office buildings, and also a new film studio. As we know, Amazon with their Prime and with their kind of movie making business is really quite ambitious. They've taken over the James Bond franchise, and there's some real investment and money being put behind that. So lots of money coming into the country, lots of jobs being created. I also think that's very exciting. Some people might ask, why invest so much in fulfillment centers and bring new people in there if we have all the automation? And we know Amazon is really a leader and a front runner in automation, having more than 750,000 robots working worldwide in their fulfillment centers. But the truth is there's still a lot of things that robots can't do on their own. And so there will be lots of jobs coming out of it as well. So I think that's a positive signal for the UK economy amidst some of the gloom.
Well, actually, before I'm going to ask you to tell us more about the Visma deal. But Andrew, does that sound positive to you?
Most of the spend, like especially on the data centers, I mean, doesn't that just reflect sort of global hyperscale data center expansion? And it's not a unique bet on the UK economy. I mean, AWS is making similar bets in Germany, Spain, Australia. I think it was like 18 billion in Germany, 15 billion in Spain. Can't remember how much in Australia, but double digits. So obviously, it's great we're not being left behind, but it's not a structural game changer. I think it just reflects their global strategy. And also, really importantly, you mentioned resilience and sort of national sovereign capability. It does still mean that compute capacity is all still US controlled. So I just see this as a reflection of the expansion of the market. I don't see this as a big, bold bet on the UK. I see, the UK is a big market. The UK is a fantastic market, but they're making other bets elsewhere.
Well, yeah, so exactly. As I said, we wouldn't be very good Europeans if we couldn't find some way to put a negative spin on it. But
it's not negative. I don't want to misplace optimism, right? I think that it would be terrible if they chosen not to, right? That would be really bad. So it's great that they have, and that is positive, and that just demonstrates that UK's a fantastic place to do business and a great market. But I don't think it's some sort of sign somehow that we're suddenly overtaking others.
Mads, tell us about Visma, because this is a bit of a biggie.
Yeah, I certainly. I mean, glass half empty, glass half full. I took the glass half full today. And for the next one, I mean, there are also two sides to it, but certainly the headline news that Visma is going to IPO in London next year. And it's not a small deal. They're targeting a 19 billion euro price tag. So it's a decent sized company. And that really comes at the back of a lot of challenging times for the London Stock Exchange. Lots of delistings, companies like Arm that are, out and out British, tech successes still, when they relisted back from the Arm, from the SoftBank ownership, went back to list on the Nasdaq. So Visma is going to list in the UK. And why UK? Why not the Nasdaq? One might ask. You have 10 times the daily trading volume in the US. Wouldn't that be a better place? Well, the truth of the matter is that Visma is a very European company. 70% of their revenue comes from the Nordics and the Benelux, and they are selling specifically accounting systems, payroll system, and other B2B software into small and mid-sized enterprise. And so they are really not very well known outside of those markets and outside of Europe. And so I think there was a suspicion that they might just be forgotten on the US markets, whereas in Europe they're better known, and so therefore can get more and better market exposure. So this is critical for London. London desperately needs some success after all the delistings we've had. Again, you could argue kind of is it glass half empty? Was there no other good choice for them? But I think again we should pocket it in the win column.
Well, it puts the 78 million, I think, the UK IPO in Q1 was 78 million, so 19 billion is quite an order of magnitude, which is great.
Yeah, real money.
Let's talk about, so there's been a lot of noise this week about the UK industrial push, and we got notification from the British Business Bank about extra money going through the bank that's going to go into the investment pockets in venture and other areas to support mainly these 8 industrial prongs. But what else is happening on the industrial side, Mads, if you can continue with this?
So the UK government has released their long-awaited industrial strategy. It's a 10-year strategy targeting 8 specific sectors, representing about a third of the UK's economy. The mission is, as ever, to get to growth, get back to the highest growth in the G7. I suspect it will take more than just this industrial strategy to get there, but there are some positive signs of life, and some of it is around advanced manufacturing, which is welcome. Creative industries, which the UK traditionally has been good at, defense, which seemed to be timely, and then also digital and AI, which of course is important. We know that energy and energy cost has remained a huge challenge for the UK. Industrial electricity is the highest cost in the G7. So companies here pay about £258 per megawatt hour compared to $60 in the US. So just, so much more. And so we absolutely need to address that. And there's an attempt to try and do that with the industrial strategy here. Some specific initiatives that are being announced is around levy-free power for heavy industry. So about 7,000 specific companies in electro-intensive areas are getting a 25% reduction of their electricity cost. And there is also work being done to reduce the amount of time it takes to create and connect new power generation to the grid. So today there is a backlog of more than 500 gigawatt of generation capacity in the UK. Some of it might be zombie projects. The backlog today stretches as far as 7 years. So if you want to create kind of a major thing, a kind of a solar farm or wind or some other project, it can take many years before you can get the approvals to construct and connect. The intent is to bring that down to sub 2 years by completely streamlining this process. So these are a couple of the things that are being done, and I think overall is positive. I suspect, as I said before, we need more. Andrew has talked before about the need to reform tax and have a much more business-friendly regime. But I think there's steps towards something that's required here, and I think that's positive.
Did either of you guys see the BYD Octopus tie-up? It's not big energy. It's not the bit that's missing the price of like the industrial energy. But did you see
pretty cool,
the BYD Octopus tie-up? Did you see it, Andrew?
Yeah, it's pretty cool. I mean, I think it's just, the market needs to evolve, distributed storage of energy, selling back to the grid. Basically, they've done a deal where you can charge your car for free, or rather not pay for the electricity for your car. So I think there's some really interesting models that we're going to see finally arriving on the destruction of energy. I read the industrial strategy. I love the ambition. Don't think the UK has ever grown a firm past the $100 billion mark since ARM was sold, if you count that. So achieving that in under 10 years would be amazing, but requires a lot more than some another government white paper. The most obvious holes being things like £1 billion over a decade for chips. I mean, the US Chips Act is $52 billion. The EU package is $43 billion. These are fractions. They're not even in ratio to GDP or country size or industry sector size. And the £750 million for the exascale compute system was announced, but it has no firm details attached to it. And that was cancelled 18 months ago, by the Labour government coming in. So we're back where we started 18 months ago. So there's a lot of politicking in this, which always frustrates me. But love the ambition. I just wish they'd start aligning their policies to their rhetoric.
It's better than not having the ambition. Mads, anything else before we move on? Anything more on energy specifically?
We need more of it, and I hope it's coming.
And cheaper.
Yes.
Can we have more, please, and lower cost, and then we can do some clever stuff? Let's go with that. We are going to be a bit negative Nancy-ish now because we're going to talk about UK's economic struggles, as there is a bit of a reality check. We need to have a little bit of a discussion as to what's really going on with UK government spending, what's happening with plans and budget cuts. So growth flat, rates held, inflation still high. I don't think you have to squint too hard to see that it's quite high. Do we have the money to invest? How does the tax receipts pie split down? And if you look at the Barron's latest report of how many millionaires and billionaires are leaving the country, they estimate to be around 16,500 leaving, which is, if you squint, nearly double last year's numbers. I know
the only place the millionaires and billionaires are leaving faster is China than the UK.
And do you know where they're going? Do you know where they're going, Andrew? They're going to the UAE first, but they're going to the States second. And I can't understand
because if you're going to be taxed, right? If you're going to be taxed significantly, why not be in the biggest possible market when you do it, where you can make the most money? So you can't compete on it's not a level playing field.
But the tax regime in the States is very, very, I don't know what the right word is, when they've got their teeth into you. They really, I mean, especially if you become a resident, that's it. You're a global taxpayer, right?
But your potential to make money is huge,
Sure.
and also like the whole corporate stack is far more opaque, right? I mean, there's the regulatory overhead is lower all the way from running a VC fund down to simply setting up an LLC in Delaware, and you don't really have to file any paperwork, right? So it's a really different ballgame.
Speaking from personal experience, I'm actually not sure that's right. I think there's plenty of regulation in the US, but I agree with you that the market depth is far, far deeper. I don't think the UK is a bad place to do business. I think growth is too low and taxes are too high. But I think from a regulatory perspective, as long as you're not in construction is dreadful. But you're running a
You
tech
gotta
company?
be kidding me. If you run a VC fund, 150 million in the UK, the compliance overheads are ridiculous. You're not even allowed to send a pitch deck as a VC to somebody till they've done KYC to tell you that they're a professional investor. That's
You
ludicrous.
you have many of the same rules in the US.
No, you don't. You don't have any rules of 150 million. You can send
In
you
fact,
can send a pitch deck
in fact,
to anybody you want, and the only time you have to do their KYC is at the point they say, "Here's a check." Then you have to go, "Hang on a sec, I need to check that you're a professional investor." Then you check them, which is the sensible time to do it. When someone says, "I'm going to give you some money," and say, "Hang on a second, I need to check that you know what you're doing." Not when you talk to someone who may never invest.
This was
So that
not what I thought we'd be
it's a
fighting
completely
over.
different regulatory environment.
Yeah,
I'm sorry.
This
possibly talking at cross purposes. I mean, I'm sort of talking more about the building of a business, because I certainly remember from running a software company, just between the different states and all the different rules and regulations there are, that there is overhead, there's stuff to do.
Sure. Yeah, I mean, when I ran a company there, you have to hire an HR person to manage the city tax, the state tax of the state, right? So I hear you.
I don't know if I was a millionaire billionaire with the kinds of assets that are creating the exodus from the UK, I am not sure I would go to the States. I think that just sounds and feels nuts to me. UAE, totally get. Singapore, wherever other countries that are taking our millionaires and billionaires, totally get. But the States is the second on the list, and I just
Depends if you like 90% humidity or not. I mean, pretty sticky in Singapore.
Do you like sweating? Come here. Listen, I've got some questions for the room. So, Mads, I want you to kick this one off. I mean, obviously, we need to borrow more. There's going to be challenges with where all this investment is going to come from. Is that our only option? What does this mean for tech, investing, startups? Give us the backstory, Mads. What's happening with Labour's budget? Go.
Yeah, I mean, so I did promise Andrew that some of the negative signals would come, and it's clear that the UK economy is not at the place anybody would like it. Rates have been held at 4.25%. Growth was relatively good in Q1. You had 0.7% growth, which was higher than both the US and the Eurozone. But the US is forecasting, as I said, 3.5% for Q2, and the UK is expected to revert to sort of flattish growth, if that. UK economic context, we've had jobs lost after the national insurance rise. So the UK now is caught between high inflation, high rates, and low growth. And it's really not a great place to be. And it's against the backdrop of that we've seen the UK government now try to reform the welfare system. We've had an absolute explosion in the amount of benefits paid out to working age adults. In 2019, before COVID, the government spent £36 billion a year. Last year, that grew to £52 billion. And without reform, it's expected to grow to $66 billion by 2029. This is in real money terms. Okay, so this is already adjusted for inflation. So from 36 billion to 66 billion over 10 years. And it's simply just because so many more people are quietly either leaving the labor market or have issues, or there are things that mean that they're sort of parked on benefits. And it's a challenging state for the economy, especially because the public finances are so pressured. And so there was an attempt by the government to try and reform this, to say, can we change some of the parameters and some of the payouts and some of the things to, instead of going to 66 billion by 2029, go to 61 billion by 2029. So not a cut in real terms, but just less of a growth. And the Labour Party absolutely exploded in a backbench revolt. More than 130 backbenchers signed an amendment to block this. This is one of the things we spoke about last year, which is always going to be this government's biggest challenge, which is it's got a large sort of fairly leftish segment of the party that is not terribly pro-reforming the government and the welfare state. And it's worth bearing in mind that if you look at the areas of the country that would be affected by this welfare reform, 92 of the top 100 most affected areas are Labour held. So many of the MPs are in seats where the number of people, working age adults on benefits, exceed the majority they have. And so there is an absolute anxiety and concern that if this reform is pushed through, that people will lose their seats. And so, classical, we're back to, Andrew mentioned earlier, kind of the politics of this, that, we do need to make reforms because otherwise the country will go broke. But it's very, very hard to do in the current political climate.
a lot of the cuts were in disability, or a lot of the PR around the cuts were in disability. So it's an incredibly emotional topic. You've got these kind of this vision of children in wheelchairs not being able to eat because something has been cut. So I think there's like super emotional side to all of these decisions, which I think is always a trick.
But bear in mind, yeah, exactly. But bear in mind, it's not a cut in real terms. You are outlooking,
But that's how it's
increase in
perceived,
spending.
right?
Exactly. But you're outlooking an increase in spending from 52 to 66, and then the proposal was to take that to 61. So you're still looking at growth in real terms, just less growth. But you're absolutely right. Immediately, you wheel out these terrible stories, you put them on the front page, and it becomes very emotional.
Tiny Tim asking for gruel, right? Andrew, what what is your take? Is there anything else that you would add to what's happening with either the Labour government or the macro piece?
Just as Matt says, I agree. I think it's really worrying. It's sort of stagflation-lite. The UK is entering a really dangerous mix of high inflation, low growth, political gridlock. There's no clear escape route. Even if the government wanted to, for the reasons you've just described politically, they're really cornered. And because of this obsession with ideology, rather than sort of focusing on growth so that the government can spend the money it wants to on the people that need it, they've cornered themselves. And while the US, I think, is looking at a 3% increase, and the EU slowly starting to pull ahead, we're stagnant, and we may go backwards. The poor man of Europe, we're going to see those headlines again very soon. And I'm sorry, this does just sit at Labour's door. Like, they came in, talked about growth, did their traditional policies of tax the rich because they deserve it, make it unattractive for business, and now we're paying the price of lower tax take whilst trying to spend more on services. So I'm a centrist when it comes to this stuff. I'm a pragmatist. I want to see policies that work. I don't really care about the ideology behind them. And just like any business, if you don't increase essentially your profits, which is the government's version of tax, then you can't spend and grow the business. You're just running yourself into the ground, and that's currently what we're doing.
Will we see a reform government off the back of this mess?
There's no possible way this Labour government will get into the next election. With the cabinet, and we may get something we really don't like.
Gosh, no, listen, we got to drag that. The next thing I want to talk about is this retaliatory tariff tactic from the EU. But we are going to have to. I know we're going to end on some positive notes, so it won't all be doom and gloom. But we're reading this week how the EU is preparing retaliatory tariffs, if I can say it. It seems to be the love language of Trump, so I can understand. So you can play that game. Sure. We've got 10 days until this potentially escalates, because the current deal with the EU expires on July the 9th. So who's spending what where? Who exports more or less to whom? Who has the negotiating levers, and how will all of this trickle down to us as investors? Mads, over to you to set this one up for us.
We know that there's been a Trump trade tariff saga ongoing for the last couple of months. And
I love how you got those words out.
He has sort of made a deal with the UK, or the UK has sort of made a deal with him, which I think mostly was us agreeing to what he asked for. Then he's made an agreement with China, which I think was mostly him agreeing to what China asked for. And now the EU is the last man, woman thing standing in his way, before we can get these trade wars hopefully put behind us. He has warned that massive tariffs will be slapped on EU imports if we don't get to a resolution by the 9th of July. The EU has prepared retaliatory tariffs, and I think they're up to, a good number right now. It was initially 21 billion, but that's increased to a higher amount. And so the question is, what's going to happen between here and there? I don't think anybody really knows. I mean, we've always expected that, based on form, there's going to be some taco coming out of this. Trump always chickens out. But, it's possible this could blow up, because I don't think the EU is of a mind to roll over on this one. And clearly he sees the EU as the biggest culprit in this whole trade war, maybe except for China. And so he is minded to, put at least try and put on the thumb screws, especially vis-a-vis the German automotive makers. So there's real tension And if you were to speculate about where the next big blow up could come for the global economy, financial markets, etc., it could be these tariffs coming back mid-July.
I think the only upside is that he just folds, to your taco point. So it could get all like heated and nasty and everything could kind of look like it's going to melt, but it's not the usual government vis-a-vis government action where it takes then months to filter through. It's pretty much okay, and then everything gets reversed or a new deal is done or so. So hopefully whatever happens, even if it is a bit of a mess, it'll be brief. But Andrew, where would you take this topic?
I mean, the EU they try to be targeted and a bit measured, right? And I wonder if that just comes across as lack of leverage rather than a sort of clear strategy. I think even with the political will, sort of again with the right rhetoric, I think Mads hit the nail on the head. You know, Brussels can choose to act fast, but Germany's car sector is spooked, and they can they've got huge lobbying power. And the Trump risk is sort of asymmetric, right? I mean, the EU has sort of got one eye on the WTO rules, and you've got multifaceted pockets of leverage and lobbying, and you've got a lot of people to satisfy. You know, he tweets tariffs, right? It's like it's all very well being really structured, but it could all just be steamrolled by an overnight executive order. Yeah, I don't think necessarily. I think we should fire back, but if you're going to fire back, I'm a big believer in a fight. Once you're in a fight, you go for the kill, right? You go for the death. You don't mess around. You don't tiptoe, because then you just get picked on by the bully. So we're in a sort of David and Goliath, slingshot kind of.
But does the EU have the slingshot? I mean, I don't know where. Mads, you know where? I mean, how much is the automotive piece of the European exports? It's quite a big chunk, isn't it? Do you remember?
Yeah, it's a big chunk. I don't have the number here, but I know that the EU has targeted now and identified 95 billion euros worth of US imports that are targeted, as opposed to Trump, who has proposed a general tariff on all $500 billion of EU goods import. Right. So the idea is to try and make it more targeted, also, of course, because that hurts consumers less. Let's not forget, ultimately, it's the consumers of your country that ends up paying these tariffs.
Yeah, they're paying them
in the form of high prices.
I wonder if there's anything strategic, like the Chinese withholding magnets and rare earths. I can't think of anything in Europe that there's a lever on against Trump, but we'll maybe see how this pans out. We're going to shift gears a little bit. We're going to talk about how AI is reshaping business. So it feels to me like AI is really starting to reshape how business is done. I don't know if I've just got happy ears or if I'm just looking out for the stories that I want to hear, but beyond the headlines, it feels like rubber is starting to hit road. We've got Apple looking to buy Perplexity. We've got tiny teams and solo founders starting to make waves and have real impact in business. As an example, DocuSign is suing Springtime, which is a tiny team who built a free version of their product, allegedly in 2 days. Meta Anthropic recently won their AI usage cases, how they're ingesting data. The EU seems to be softening on regulations. So it feels like AI is starting to hit the real world. I know it has been for a while, but it feels like there's real momentum now. Physical AI, or the real world of AI and how it's shaping business. So Mads, what's clickbait? What's reality? How is this going to affect real world startups and businesses over the next 18 months or so?
There's this notion of vibe coding and of using AI to code in a really efficient way. And it's not that long ago since we started talking about kind of the one-man enterprise. And we've had the first major exit by a solo founder who didn't take venture capital, which is Mauer Shlomo from Israel, who exited Base 44 to Wix for $80 million. Now, 80 million doesn't sound much. We've been talking about 19 billion euro IPOs just a few minutes ago.
It's an acqui-hire, isn't it?
It's an acqui-hire, but it's effectively an $80 million exit plus another $25 million retention bonus on the back of a company that's 6 months old.
But it's a shortcut. It's shortcut by the team. I mean, we did first ticket into Magic Pony technology back in the day. That sold for 150, 200 million, I think, to Twitter, and a team of 14. It was an acqui-hire.
It was an acqui-hire that had raised venture capital
to catch up.
And this company has not. And so what's really interesting is that companies seemingly are now able to get very far without money at all, because they were able to build a product, get to market, start yielding revenue, and never needing to raise any money. And part of
Well,
what
this is
made
this
them-
whole seed strapping thing, isn't it, Mads? We've seen a lot of noise on seed strapping.
Yeah, and part of what made them able to negotiate so well is they said, we don't need to raise. You can buy us now, or we'll just keep compounding. And that was a strong position to be in. Wix, on the other hand, are really struggling and needed that expertise. And to your point around acqui-hiring and getting the talent. But it's a super, super interesting case, and we're going to see more. I mean, we've seen Lovable from Sweden grow incredibly fast.
The seed strapping thing is really interesting because I feel like it's a little bit like the new dawn when it became very easy to spin up SaaS companies on the cloud. And for a while there, the cost of building those businesses dropped. But then as soon as it became very busy, you now need to spend as much building a very successful SaaS company as you do building a deep tech company, because it's so noisy. You have to spend that on marketing and brand and acquisition, especially in the growth phase. So I feel like this is the same thing will happen. We're going to see a bunch of companies, very quickly spin up in this window of opportunity, perhaps at extremely low cost, but then the playing field levels. And that means everyone has access to the same guns and the same ammunition, metaphorically speaking. And that just means that then what do? You throw money at the problem because you've got to cut through some way. So, we'll cut through with brand, we'll cut through with marketing, we'll cut through in another way, which usually requires cash.
Yeah, I think that's exactly right. I mean, of course, this has been, as Dan says, the discussion, right? Is this going to obviate the need for anybody to raise venture capital? But I think you're spot on, Andrew. There will be a need.
Yeah.
Well, but there is that. I mean, we would probably find something else to do if that was the thing. But I think what we know is that it's actually the go-to-market and its distribution that costs the money, and there'll be as big a need from that as there's ever been.
Yeah, and also I think there's everything is going to evolve. I think the venture model will evolve. I think how startups are built will evolve, and that's great. And we've got this accelerated journey that we're going on with AI. But I also think a lot of this is just sexy PR. A lot of these stories aren't anywhere near the norm. So I think there's also an element of the tech press and the broader press needing these cool, sexy stories to anchor, because they are really interesting. But this is, by nowhere near any kind of normality yet as to how you build and sell and exit a business. But let's have a little poke on the AI copyright piece, Mads. What's happening with AI and how these foundational models are ingesting data?
At this point, I think we all have a pretty good idea of how these models work. You soak up lots and lots of training data, and then you use that to create a model that probabilistically says, well, I kind of know how words they fit together. So you give me some words and I'll then use those words to predict how other words could fit together, because I've seen millions and millions of words before. And it turns out that the internet is a great place to look for words. And so OpenAI, Anthropic, Google, and others have been mining everything they could on the internet to train their models. But that's not the only thing they've been using. They've also been using books, copyrighted material, stuff you're not really supposed to, copy because there's a copyright on it. And so there's been some landmark cases this week. Both Meta and Anthropic have had their day in court, and they both won the cases. And the doctrine that's been lent on is this transformative use doctrine, which comes out of a 1994 case where Two Live Crew, they had a rap parody of Roy Orbison's Pretty Woman, and they created a whole new
sing it,
song.
Mads. Sing it.
I was going to say, go. You can't leave us
Dan,
hanging, dude.
Dan is the entertainer here.
I don't remember Two Live Crew. I mean, maybe it's after my time.
Everybody's been looking it up this week, of course, because that is sort of the case that established this principle, which is you have fair use if you use copyrighted material for a purpose that's transformative, i.e. doing something that's completely different. So you can copy stuff from a song if the output is a parody, and it turns out you can also copy stuff from a book if the output is an LLM, and not just I am copying the book to sell the book. And so, of course, this is a concept that's completely different from how we think about copyright here in Europe. But on the back of that, both Meta and Anthropic won their case. And
but
that's super interesting.
But it's a technicality, isn't it? I mean, my understanding was they won on a technicality, not on the legality of training data. So, I mean, if that's true, that this is still out there to be argued either way. And my understanding is that Anthropic is still exposed, because I think downloading 7 million's worth of pirated books still opens them to potential damages.
That is exactly right. That's exactly. They're not out of the woods yet.
Yeah, I think it's just the start. We're going to see. I think it's going to be a while before this is unpacked.
What happened with New York Times and OpenAI, Mads? Do you know what happened with them? Did that go to court?
We're not done yet.
Right.
We're not done yet. That's still to be litigated. And Andrew is of course right. I mean, the Anthropic download of private books case is still very much on the docket for being litigated. And there was also, as you say, Andrew, there was an issue around the publishers in this case. They actually had quite a weak litigation strategy. And so the judge said, look, if you come back with a stronger case, there might be a different decision. So no, we're not out of the woods yet, but interesting that sort of the LLM majors, they won round one.
We might actually see general AI before these court cases are finished.
There are definitely some people betting on that.
20 years. There you go.
Yeah, there you go. Like quantum and fusion, every all 20 years, baby. I want to talk more about physical AI. So behind the scenes in Superseed Towers, Matt, you and I talk about physical AI all the time. This is, again, where AI is hitting the real world. I saw Tesla finally launched its Robotaxi pilot in Austin, Texas. I don't know if you guys saw the
launch.
videos.
Is it a launch? Is it a launch?
Well,
isn't it more like? I mean, it's more like a public demo, isn't it? I mean, with Tesla, when they launch anything,
didn't they talk about
like
this in
gesture.
2016?
It's like a gesture.
My sense is that it's taken so long that the pressure to perform was so high. And obviously, you're only going to see videos where things go wrong. And I saw cars mounting taxis, jumping red lights, or, stomping on the brakes with people in the back. So, and I think it was only 10 or so cars, but Mads, you got some of the inside track here. But
with safety drivers as well, right? With safety
drivers. They all had safety drivers.
With safety drivers. So it's not production scale yet. And it's clear they are so far behind Waymo and so desperate to catch up that they are jumping the gun a little bit. So yes, it was the formal launch, but it was a small launch.
Got to keep the share price up.
And it's a bit of a damp squib as well. Yeah.
There's no question of the future, and nobody should doubt that within their lifetime, cars will have no drivers, and traffic will get better, accidents will go down, and I'm first in the queue for that to happen because I just think driving is just so backward and terrible, and humans make terrible drivers. But I think autonomy's driving future is stuck in traffic at the moment.
Yeah, I think robotics generally, I think it's going to become more prevalent. I wonder if Elon is having second thoughts about not going LiDAR first and going camera first with his technology. Listen, I've got a bit of a left field for you. This is something that you both know that I bang on about how Europe is going to be the Bay, or should it be the Bay, or can it be a different version of the Bay? It's often a very short conversation because we all know what it means. It just means more bloody investment. And if you just if that's always the end answer, then again, it's going to be a very short conversation. But I mean, Deal Room released a fireside chat last month, I think it was, with Saul Klein from Local Globe, Konstantin Van Oranje from Tech Leap, and a few other smart ecosystem dwellers, all about the new Palo Alto in Europe and what it would look like and feel like and smell like to build that kind of ecosystem. Again, we've been reading articles this week about how Europe has gaslit itself and we're talking ourselves down. And as we've just mentioned, it's always easy to do that, so what? But I do believe that this is changing, and I do believe that Trump has given us permission to change. So Andrew, I know you're a big believer in tech sovereignty, and this is a massive issue for you. Can we as Europe become the new Palo Alto? If so, what does it look like? What do we do? How does it smell, feel, and touch? Is there anything to dig into here for you?
Yeah, I mean, look, you're right. It's all the things you said, like it's regs and it's capital. But there's one single thing which underpins all of this, and that's a confidence gap. We could be like the Bay, but we keep asking for permission. And Europe doesn't actually need to become like Palo Alto or San Francisco. It just needs to stop acting like it's not allowed to be. And that goes for founders, investors, and policy and political regulators. So, we've got the same engineers, the same talent. There is a culturally different risk tolerance. Currently, there is not the heritage to look back at to give you the confidence. There isn't the $1 trillion exit. But you don't build Palo Alto by sort of funding more PhDs and government initiatives. You build it by having horrible failures as a startup founder, and you build it by the government optimizing policy so that it doesn't constrict growth. And I think if you just do those two things, the market really will do the rest of the work. I'm not a believer that free markets sort of solve all problems. There are terrible problems with free markets because they're inefficient and they in many ways, and they require regulation. But in this case, where you're talking about more capital required, and you're talking about, really a decision for people just to be bolder, that's a cultural narrative that needs to shift. And in order to support those people that do make the leap, that don't go into banking, that do start a company, then you need to encourage all the people with the money to put the money behind those people taking the risk. And it's really that simple. It's a mindset. It's not a location, it's a mindset. What's
the one thing, how do you change? I mean, this goes to your previous point about sentiment and confidence and that can do, that salesy attitude, that Americanism. So what's the one thing at a cultural level that we can change?
It's a great question.
Because that's always been on my mind. I mean, I was talking to Madsen a while ago now about, I've got this theory that maybe if we just increase a tip culture, this is a totally stupid thing to say, but bear with me. Just increase a tip culture, have a tip culture of like 20-25% in Europe, where you get this circularity of money thing going on. It's like you really understand that flow of capital, maybe multiple little tiny things, little attitudinal changes that will get us into this understanding how money works and how investing works and how building works. So silly things,
well, there's two things. I mean, one is you could try and make failure more of a badge rather than a black mark, and that's consistent through.
I think we do that.
I don't know. The wider culturally, I'm not sure people do, and also I think you see it where an awful lot of UK and European founders continue banging their heads against the wall with their startups long since when they should have folded them and given the remaining money back to the investors. And they just, it's this sort of psychology that somehow if life isn't hard, then it's not real. And so they keep slogging away at it. And actually, we say to some founders, you've not hit venture scale growth. So you've got two choices. You flip it to a lifestyle business if that's what you want to do, but stop kidding yourself. This is ever going to be a venture company. It isn't. Why don't you flip it? Or you shut it down, give us the rest of the money back, and go again. And it very rarely happens. And you see it all the time.
Part of it is on VCs to have that conversation.
100% is on VCs to have the conversation. Of course, that then feeds into in places like the UK with the EIS funds. They don't want you to do that. They want you to keep going because they want the tax rebate after 3 years. So then you're into all these perverse motivations from bad tax structures. Well-meaning bad tax structures. And the other thing, I mean, I've mentioned this before on the podcast, Finnish founder Arpe has just started Dragonforge, which is designed to fix this exact problem. It's a new learning institution which will teach people how to take big bets on the most important technologies to solve the biggest problems in Europe. And that's exactly the thesis behind launching that institution, is to try and fix this cultural shift.
I don't think education is going to solve that. I don't think people need to be educated. I think it needs to be regulated, tax incentivized.
You can't regulate someone to have greater imagination, can you? You can't regulate someone to believe in the future.
I think they know what AI is. They just don't care because they're making enough money over here, or they're not incentivized over there. I think they know. I don't believe that Europe is more stupid than the States. I just don't believe, to your point, we don't have this.
It's not more stupid, but investors lack imagination. I think I consistently see VCs in Europe and UK being unable to imagine massive new markets. So if you take the banking market, 100 banks in Europe, all worth 100 billion on the balance sheet. Oh, offline banking. Oh, online banking. That makes sense. Look, take online banking. I'll invest in that because there's a massive existing market. You take something that doesn't exist and you try and convince them that it will be big. There's no imagination. There's very little imagination.
Right. I'm happy.
That's the biggest problem.
I'm happy to. Mads, I know this isn't a happy place for you. This isn't you. I always get that you think this is much more pragmatically about this kind of stuff. It's like, come on, let's just build big business and get on with it. But
but I think Andrew is essentially bang on. We need to be braver and bolder and more imaginative, and we need to make it okay to fail. And I think investors have a huge role to play there. We've got to be smart investors that dare to dream with our founders, dream big and go for it. And we also have to accept that failure is a massive part of this game. We're not, private equity buyout investors, and companies will fail, and that's okay, right? And then we help the founders move on to the next thing, and all is good. I think we have a huge role to play there in terms of how we work with founders, how we support them, and just create a better, more nurturing venture ecosystem. So I think there's a lot of talk around how venture is not supportive enough, and we don't back founders widely enough. And I think that's in many ways, that's a misunderstood discussion, because it's not about backing all sorts of things that should never be backed. Like, this is an Olympic game. This
100%.
is about being number one at something. So it's not about being, kind of la-la and just doling money out to stuff that should not be funded with venture capital. That's an extremely expensive form of money that's only for moonshot type of ideas. But when you have invested and you back something, it is to create something that is, truly a number one in the world. And you should accept that sometimes it just doesn't work, and that's okay, right? This is literally part of the model.
I just think a lot of, maybe this is to Andrew's point, maybe it's not educating LPs, but maybe there's an education piece for founders as to what venture capital really is. Because a lot of the rage that I get from founders is, why are you not investing in these kinds of businesses and these kinds of ways? Because they're not on the venture track. They're not ever going to make venture scale returns. So I think there's this natural thinking of, well, I can bootstrap, I can angel, I can go and raise VCs. Like, well, you can only do that if you are on the venture track and if it is venture scale. Anything more, Andrew, anything more on the new Palo Alto, the new Bay in Europe?
I think it is the 2 points Matt said. I think it's failure and imagination. I think we're aligned on this, and European founders stay longer in failing startups, not from stubbornness, but because sometimes I think because the rules and the shame make quitting early impossible or harder. There's some structural stuff we can do to fix that, but it's also narrative. It's in our schools. It is in our day to day, and it's how we invest as investors, right? Good question to ask ourselves. How many startups have you invested in where there is no existing market, but you backing a company that you believe will create a market? How many category creators have you backed as an investor? Because that's what we should be doing. And I find that they're very hard to get follow-on funding in Europe, and I end up having all the US investors invest in them. So all my startups end up flipping to the US.
I'm determined not to end on a bummer. Who's got some positive news? What are we doing this week, guys and girls? What's happening? What's in the agenda? What's the good stuff? Mads, what's happening with you?
Well, as we spoke about, Q2 is coming up, so it's time to prepare for earnings season, which will kick off here in July once the books are all tallied, and hopefully markets will sustain the kind of positivity we've seen here towards the end of Q2. And then the second thing is really this July 9th deadline for the EU-US trade negotiations. I'd say those are the two macro pieces that will drive markets through, as we go into Q3.
And they're all buoyant so far. Andrew, what's in the positive news bucket for you? Give us the good stuff.
Positive news bucket. One of our companies there, it's the simulation of its first chip demonstrated a 50% reduction in energy usage. Technically, that energy usage could be up to 5,000 times less for equivalent chips. So very first step on a long journey, but very exciting.
Loving your work, gentlemen. Catch you all next week.
See you on the flip
Thanks,
side.
guys.